Thank you, Jack. Thanks for having me this morning. I appreciate you guys inviting me to your meeting. I've attended other meetings in the past and think highly of your organization. It's a well-run residential firm with a lot of respect. And Dunham has been a long-time friend of mine. I've got to know Jack and many others out there. So I wanted to come today and talk a little bit about commercial real estate. I'm going to move over here because I don't have my cheat sheet to look at. But I wanted to do sort of a high-level thing on commercial real estate for you guys. We all, commercial and residential, went through such a tough time in 08, 09, 010. 09 was just a frozen market for us. We had some hangover deals, as I'd like to say, that got me through that. But late 09, 010, it was really challenging for everyone. We didn't see very much any long-term leases. The sale market was shut down. Financing was not doable. And I'd like to say in the last 6 to 12 months, maybe 18 months, we're seeing that come back to life. So we all breathe optimism in what we do. We have to get out of bed every day. And I really do honestly believe we'll continue to see this thing slowly turn around, nothing rapidly, but it's gonna come back.
All right. Yeah, hit to the right. Right arrow.
There we go. A lot of verbiage there. That's a little bit about me. I've been with CV right out of college, trained with them, never left the firm. It's been a good run. The company offers a lot of latitude with what you do. And we've grown up to become a big company, and I'll touch on that at the end of the slide. Just a representation of several different companies I've worked with. We do a lot of corporate work, but we also work with the entrepreneurial companies, the mom and pops. So that's not above us doing a 1,000 square foot office lease to, we'd love to do the 50s and the 100,000 square foot leases and sales. The area that our office covers, the South Bay office, and I guess it's important to know, we were in Torrance for 20 years and we just moved to El Segundo, the Rosecrans corridor, which is something I've been voting to do for a long time. But we cover an area that really is from Long Beach up to LAX. It's probably a 20-plus mile run on that 405 freeway. We really break down our market into 6 submarkets. We've got LAX, El Segundo, Central Torrance, 190th Street, and then in Long Beach, it's kind of suburban Long Beach and downtown Long Beach. And I'll go into some of the deals that are happening. I wanted to give you a feel and a flavor for some of the highlights in those different submarkets in LA, or in the South Bay part of LA. The industrial market really is just the workhorse of the South Bay. As you know, the LA and Long Beach ports are one of the biggest ports in the world. The good sign is we have found, or I have found, that the industrial market tends to lead us out of the recovery, and we're seeing really good signs that the industrial market has come back. You can see at the bottom the vacancy rate's down to 3%. The bigger, high clear warehouse buildings with a lot of docks and doors, that's the way these guys talk, are getting leased up. The rates had dropped for a while. The owners were sort of in denial, so we didn't see any activity. The rates dropped and the big industrial users came back in. And also we're seeing the investment capital coming back into the market, which is really exciting to see because they're the ones that tend to fuel development too. So South Bay is a pretty mature market, but we're seeing some of the older obsolete buildings getting raised and new buildings coming in. The other important thing to note was the Inland Empire saw an incredible amount of vacancy. There was so much speculative development out there for industrial product. We're talking like 100, 200, 300, even 600,000 square foot buildings. And the guys out in those markets were saying, oh, there's inventory that could last for 8 years out here. We don't know when this thing's going to come back. And it came roaring back. It was just amazing how quickly and how robust it came back. And we continue to see good demand for industrial product and not a lot of good buildings remaining. I put some highlights up there too to help. I don't know if you guys can see them, but these are our hot topics. We put together a newsletter, so I wanted to touch on a few of those things, and we've definitely seen a decrease in vacancy, which is always a good sign for the market. Some newsworthy things. One of the biggest deals that was just announced, you guys might have read about, is Porsche came in and did a long-term ground lease on a site at the 405 and the 110 intersection. It's an old golf course, and the guys at Watson Land Company, which is one of the bigger landlords in the market, had been working on the deal for I think a few years to put this thing together, but it happened. And it's a big project because Porsche is going to build a brand new office building. They're going to have food amenities, and it's going to be the top racetrack in the world. There's only one other racetrack like it, and they're going to test cars there, and they're going to have, like, you know, ice raceways so that the cars can handle in the ice and the rain and all these other types of things. So I think it's a big boom. It's a testimonial of Southern California, and it's nice to have Porsche around it. Apparently Porsche, they sell more Porsches in Southern California than anywhere else in the world. I think it's something like 38% of all Porsche sales are done in Southern California. This is the office statistics. You know, a lot of numbers. I think the office market continues to trail. The challenge we have is this year-to-date absorption. We you know, that's all negative. So we're not seeing a lot of new tenant activity coming into the market. The other challenge that we've had is the bigger tenants won't move. So you know, they'll come out to the market, they'll test the market, but they oftentimes renew where they are, and that has a lot to do with the cost to actually move and the decision makers not wanting to take the risk to make a big move. There's some underlying good things in the market. I mean, we are seeing, I would say, like between 3 months and 9 months ago, we saw the big capital coming back in. The institutional capital was trying to buy a lot of these in larger Class A office buildings. And it slowed down in the last like 30 to 60 days, but we saw a lot of big buildings trade in El Segundo, and we also saw some companies, like we're seeing a lot of production companies continuing to come down and want El Segundo because Santa Monica and Playa del Rey and Marina del Rey is sort of pricing them out of that market, and they're able to get better value in the South Bay, and that's a good sign. One of the deals that happened that's not noted in the bullets is James Cameron, you might have heard, came down and leased, I think it's close to 100,000 square feet at the Manhattan Beach Studios. Do all his Avatar deals or his following things, and that's a big deal for the area. Rhythm and Hughes bought a building in El Segundo, the old Computer Science Corp campus. And then there's several highlights again that talk about, you know, buildings selling, vacant office buildings selling for like about $100 a foot, and then net leased investment buildings selling for about $180 to $190 a square foot. I will admit during the peak they were probably selling for $250 to $280 a square foot, some of these office buildings. The one carve out on that is we are seeing some capital chase office buildings that have long-term leases. A good example is a property that the Aerospace Corp is in. They have a long-term lease, and that building will probably sell for in excess of $300 a square foot. And we're seeing a lot of syndications come around to buy the real estate sort of like a bond. And so they might not get, they'll do a 4 or 5% return for 10 years, but they know that they have a hard asset at the end of the 10 years, so hopefully when the market turns, they'll benefit from that. That's just an aerial shot. In El Segundo, which is the biggest office market in the South Bay, and probably affects the stuff that you guys do with some of your clients. We have this Rosecrans corridor, which, as you guys have all seen, has really grown up to be the amenity-rich, highest desirable spot to be in. I would say, generally speaking, the office rates are the highest in that area. The other part of El Segundo, I don't know if they added this next aerial, is what we had one time called the Super Block, which is this whole sort of Pacific Corporate Towers area. That's a bulk of, there's a 1.5 million square foot project right here that's currently on the market for sale. GM Pension Fund has owned it for probably at least 15 years. Our company's handled the leasing and management on it. They've taken it out to market. It's a big price tag. We'll see what happens, but they're trying to get that sold. Northrop is their biggest driver of office space. They are really tentative on making any long-term commitments now, but for example, they leased this building a few years back, and they continue to either do short-term leasing, but they are out in the market all the time. The other project that we came in and talked to you guys about was that Plaza El Segundo, or excuse me, the Edge at El Segundo, Campus El Segundo. campus also going as a 46-acre project. That's the dirt you see. And then we had done 15 buildings for sale. All have sold. The developer hit his pro forma. The market was trailing off. We were telling guys, you know, give them a price and get these things sold. And luckily, the last 2 buildings sold to an investor. But what is really nice to see is none of the guys and gals that bought buildings in that project have put the buildings back on the market for sale. They're all holding strong and doing well. And that's a good sign. And then the last 2 buildings that were purchased by a local investor are leasing up, which is also at good rental numbers. We're seeing the office tenants too. We're seeing a lot of new office tenants gravitate towards the low-rise buildings versus the mid-rise or high-rise buildings. We're seeing the newer companies want something more creative and cool. They don't really want to be in that vertical up and down type environment. That's kind of a trend in the market. Oh, this is newsworthy. We all know Plaza El Segundo is a really, I think, turned out to be an incredible development. It was a tri-party agreement between the Comstock Group and Mar Ventures, which is Alan McKenzie, is a really well-known developer in the area, and then Richard Lundquist of Continental Development. They developed it, they leased it, they lost a couple of their big box tenants, they've gotten them back in, stabilized the asset, but they took it out to the market, and it's probably going to sell close to $200 million. Our office is handling the sale. But a company called Federal Realty is coming in, and they're a really large, well-capitalized REIT, and they're buying this, and they're hoping to buy a lot more. And again, it's, I think, a great testimonial to our market and demographics of our market that they're coming in to buy this at a really strong price. And that will probably be closing in the next 30 days or less. I'm coming down to a couple projects that you guys are more familiar with, the beach cities. I know that I work in the beach cities. We all watched 200 Pier get developed. I was involved in that, in the original sale, not in the end deal. But I thought the project turned out great. Of course, the timing wasn't right for the guys involved. But we worked really hard on underwriting it for the lender and trying to compete for either the listing or bringing buyers in. I had several buyers that came from out of the area, and when they come in, and you guys can appreciate this, you know, the showing is everything. If the buyer doesn't have a good feeling the day they see the property, they don't get excited about it. I remember a really wealthy guy coming from Rancho Santa Fe. It was this overcast, cloudy day. The road work was still just, you know, going on up Upper Pier, and I couldn't convince this guy that you know, to come up a little bit more on his price. And you know, a week later it's sunny and clear, and the roads are getting cleaned up, and sure enough, the other guy that bought the thing came on that day. Yeah. But it was one of those projects that sold by the lender. The lender held out for you know, and did the deal directly. But I knew it was one of those deals where the buyer would buy it, and everyone would look back, you know, in 3 to 5 or 6 years and go, God, that guy made a great deal. And at the time the deal went down, no one could really see past the fog, so to speak. So it turns out, as you guys know, you have an office there, Dunham's down there, and a few other guys, it's 100% leased, or 98, and there's a waiting list. So, and the numbers are really strong. So I think it's a great success story for our area. And then the other project that was new, 338 and 340 Pier, another local guy built it, timing wasn't right, lost it, and that sold to an investment banker. And we thought, I was working directly with Patagonia, wanted to be in the building. A few other retailers were very committed to the building. They had to get high rental rates, and out of the blue, this high net worth guy came in and said, I want to do the building for my office, and is moving out of the traditional mid-rise, low-rise building to do that and be down in Hermosa. This is a property that Jack had done some work on, and we're going to continue to work on it. CV is going to handle the project outgoing, but it's, you guys all know, it's at Mermaid Strand. It's such a great property, but also real challenging in this environment with financing. I think the more significant part of this is the different pieces. I wanted to touch on Hermosa because you guys all work it. When you look at Hermosa, there's a couple of large chunks of property in that downtown market that if we could get someone to step up and really take a risk on it, I think long term will again turn out to be a great investment for someone. But you know, the Mermaid site is a significant piece on Pier. We all know the other project, the little buildings behind it, can be assembled in the public parking lot. But the other one is the Sea Sprite. We've done a lot of work with the green walls. They're a little different type of seller, but I think someday that will trade. And we also have a property over here with Peter Manjerian listed, which is really junky property right now. It's the vacant dirt lot and the houses in the office building and the Francisco Apartments, which if you look at what a developer could combine, you know, they could step in and take this down. Scotty's is always a wild card with the owner. This is Peter Manjerian, who's a real seller, and then this large public parking lot. And then, of course, the Mermaid site, combining that could be a great development. And a property that I was involved in with them years ago is this project here where a local investor acquired a series of homes. I'm not sure how this plays into it, but I think the point of the slide is there's a lot of opportunity down there for someone to step in and change the complexion of Hermosa Beach. And we're going to try hard to make that happen. That's a different aerial that kind of gives you a better scope of the different sites that are available. It seems that the city wants to endorse it. The biggest challenge, as some of you guys know, is the Coastal Commission. It's just a wild card on how they'll handle the development of something down there. And we'll see if we can get a skilled developer to work through it. That really concludes the presentation. I think the last slide is real small font, but it just talks about our company. When I started with what was Coldwell Banker, we were an LA-based firm. We're still LA-based, but it was relatively a Western regional firm. We slowly acquired companies on the East Coast and the Midwest. We merged with one of the bigger brokerage offices in New York City, in Manhattan, Edward S. Gordon. And our chairman, who started out in San Diego, ran our office, Brett White, had really made a strong statement that we would be the biggest company, commercial real estate company, and on different levels. So 15, 20 years later, really, we have become the preeminent commercial real estate firm. It's a big firm, and we have several different business lines that we bring in, whether it be asset management, financing, facility services, and the list goes on and on. But it's been a great run with CV, and if you guys have any questions afterwards or now, I'm happy to help you out, and I appreciate the time. Oh.
I got a couple of questions. What's the cost per square foot along the Rosecrans corridor?
I would say for the Class A office stuff, it's probably about $250 to $265 full service gross, and then the parking rates will be about $65 per stall. You know, the other thing I neglected to mention, the other large building on Rosecrans is the Manhattan Towers. That's right across from the Manhattan Tennis Club. TRW, then Northrop, had been in that building for a long time, and they vacated 230,000 square feet of a 300,000 square foot building. I was involved in the sale twice, and it sold for $220, and the last sale is, I think, close to $300 a foot. They're currently valuing the building at about $100 a foot, because the amount of cost it takes to set up those offices again is so high, and the downtime, the time to take to absorb that building, it takes so long. But as an example, they're still doing $265 full service gross deals on renewals because the tenant doesn't have a lot of options, and a bigger tenant will do better than those numbers.
My second question: what did 200 here sell for? I had a few investors that lost the money.
I think it was like 675 or 625. Yes, around $6.5 million.
The roll indicates it was 9-1. Is that not?
Oh, okay. I'm sorry.
No. Okay.
Then it's 9-1. I should know. 9-1.
And speaking of 200, looking up at 1300 Highland, Bob, do you have any insight? There seems to be some action on the street right now with that project turning over.
Yeah, I think the lender ran a little more time to try to work something out, and it doesn't appear that that's happened. So the lender might be peddling the note, trying to sell the note right now.
Okay.
That's the latest I've heard on that.
Third question: the economy, if it would have any effect at all on the Coastal Commission, trying to influence them at all and doing something about the economy?
We wish.
Yeah, you'd think it would. I know that there's a new head of the Coastal Commission. I've attended some of their meetings on unrelated matters, but it's an interesting large body of people that are very strongly opinionated. One of the biggest challenges you have is that they're all about public access. So I don't know the answer to your question. I'd like to think, yeah, that'd help us revive. Would really help the city of Hermosa out to bring some more transient occupancy tax to the city with a hotel. I don't know.
Do you know anything about what's going on with the car dealership stuff on Hawthorne Boulevard? in Torrance?
You know, I had a car dealer looking up there, and I know Audi's building a brand new flagship dealership. I know Subaru is trying to get into that market. I know Mazda wants to open up a dealership. So unlike 18 months ago when it was really dormant and quiet, those brands are trying to move into that area. And then we're also seeing some, we're seeing like Fresh and Easy come in and buy an old retail furniture building and build a state-of-the-art supermarket. Right. So we are slowly seeing that revitalize.
There's a lot of vacancy right at the Torrance Boulevard.
Yeah, it's tough, it's blighted. I've met with the city and they're really, I will say the city of Torrance has got a good team of people that will help if you've got clients that want to get into that market. I encourage you to reach out to Jeff Gibson. He's really good.
I was wondering if you know what's happening on Sepulveda and Manhattan, kind of where Skechers has their main headquarters, and then across the street, some of those, and whether you guys are involved with either the Skechers deals or other deals now.
Yeah, all their property, you guys may recall that Marta Ventures had one of those dealerships, the old Bassett Pollock tied up that you're referring to. And they had an incredible plan. They had renderings of doing I'll call it a mid-rise office tower that had office condos, hotel component with a retail bar on the ground floor. It would have really been a great thing for our area. It didn't happen. They didn't get the kind of love from the city that they had hoped to get. And Skechers came in and acquired all that land, and they're basically sitting on it. They just signed a Subaru. You might have noticed they put a sign up. They're going to have a dealership there. I think they just use it for excess parking. And I know there was a story when Pat Healey did their building originally. They didn't feel they had enough parking, and they didn't want to make changes to the building, so they acquired the land across the street to accommodate some of that. I don't think they have any immediate plans. I might be wrong. But yeah.
What's going on the corner of Manhattan Beach Boulevard and Sepulveda?
The one that's sitting vacant and all board up, that's the old Rite Aid deal.
Yeah, what's going on?
And they're not moving ahead with their deal. They're paying about $600,000 a year in annual rent. So it's hard to sort of get anyone to step into that spot. There was a time when the Rite Aids, the Walgreens, the CVS's were really bullish. They'd overpay for sites. A great example is the new Walgreens at Hawthorne and Artesia, where they bought an old tire company, and they just put a fence around it for years and waiting for a lease to burn out, and finally built their building. But on that site, nothing's happening. I mean, nothing that I'm aware of. It's something that no one can justify. The lessee is not willing to take a hit on the doing a new deal. Probably the most compelling sale comp was the one on the kitty corner of the Wells Fargo building that sold for something like $1,800 a square foot. And that was an incredibly high comp, but it had so much to do with the Wells Fargo deposits. There's a ton of cash in that Wells Fargo, and so they feel that long term that's a great investment. The banks, Chase Bank, that's the other thing I could have mentioned. Chase Bank has also been on an aggressive tear. In the old Bijou building in Hermosa Beach, we just finished a deal with Chase. They're going to move into the ground floor of that building. And also Chase is also going to move in across from that Wells Fargo and that Beach Boulevard and Sepulveda. So they've been on a real tear.
Chase is just parking all this extra money that they've got right now on land as a pure investment.
Yeah.
Whether they're making money off the operation or not, they don't care. There's all of it's parking money out there. They have so much extra money right now.
Yeah, extremely aggressive growth plan.
You see the defense industry, such as Raytheon or Boeing, shrinking their footprint this out there?
We sure hope not, but it's hard to read those guys. I mean, we're definitely, the Air Force Base in El Segundo without any airplanes on it is the most significant thing we have in the South Bay. I remember years ago they were going to move, and a lot of residential commercial real estate brokers came together to keep the Air Force Base, or help encourage the Air Force Base to say, I have two buildings on the Rosecrans corridor. 120,000 square foot building was occupied by EDS related to defense, and then a Raytheon building that was 190,000 square foot, two-story building with above parking. I mean, it's a monstrosity. It's an incredibly large building with not a lot of windows. 30-year Department of Defense contract that was cut by the Obama administration. Northrop, as I mentioned earlier, has a lot of leases rolling, but they're not making any long-term commitments. They're really not. They really are nervous about where things are, but then they'll get a contract and they'll expand in another area. So it's hard to say. It's hard to say. I don't see them expanding or growing, but they're always a force in the market.
The Hope Chapel property,
Oh, yeah.
Artesia, I've heard there's some things kind of brewing there.
Yeah, what's happened in there is our client, Continental Development, has got a deal with Hope Chapel to do a 1031 exchange. So they would exchange the Hope Chapel property for one of the buildings that a defense company vacated on the Rosecrans corridor in the back area by the Spectrum Club. And then the Hope Chapel would likely become a really nice new development with an anchored supermarket and stuff. That deal was really close to coming online in 07, 08, and then got derailed with the economy.
So is it really dormant? Or
No, it's brewed up. It's alive again. The retailers are coming back. They're interested in trying to do stuff, and the developers trying to make that happen.
And that includes all the way to Artesia down to the Hope Chapel itself?
Yeah, it does. It's a really large, pretty significant piece of property when you look at the scale from an aerial. So I think it would be a good thing for the area.
One more question.
Do you have any idea what's going on in the old coffee bean right across from Starbucks in Hermes Ave?
Yeah, the Bijou, that's where the Chase Bank's going to move
Chase
into.
Bank,
Yeah,
yeah.
the coffee bean just couldn't come up to the rents that the landlord wanted to get, and Chase was willing to pay some significant rent. And there'll be another food type service in conjunction with Chase, and they haven't identified who that is yet.
Okay.
Okay, thanks you guys. I appreciate your time.